Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. We got a big day of earnings over the last 24 hours, so a lot to go over. So I asked Jason Hall from The Smattering to come on. Jason, how are you doing this morning?
I'm good. These are going to be some fun ones to talk about.
And if you haven't already, please follow me at Riiv Investing here on YouTube, at Travis Hoium on Twitter, and then Jason can be found at The Smattering on both of those, and he has a podcast as well. So listen to that. Let's move on to Mastercard. You want to walk us through that one?
Yeah, I can do that. So I'm going to start with, I want to share a slide from the press release. Give me just a second here to pull it up. So this is from the press release. This is a good year. Revenue on a GAAP basis was up 18%. Mastercard, a very international business, right? With revenues generated in every denomination of currency, just about everywhere in the world except for Russia now.
They're more international than Visa, right?
Yeah, sort of. I mean, their business mix is a little different, right? And they've really focused on like the business to business payments and some other like cross border stuff. So they've done some really smart things in that way. But again, the key here, right, is that currency neutral, right? We look at that gap, and this is when they take all those foreign currencies, and we know the dollar's been crazy strong this year, and you adjust them to US dollars, and it's 18% revenue growth. But on a currency neutral basis, 23% growth. That's great. This is a real positive when you see operating expenses are growing at a much slower rate than revenue. This is the key to me for a company like Mastercard. This is where you get that operating leverage, where your operating income is growing at a significantly faster rate than your revenue is, right? That's the absolute key here. Now, here's the thing though, right? You look at net revenue was up 18% and the net income was only up 14%. So there's expenses that are happening that are not necessarily great for the business, even on an adjusted basis. Of course, like always, they find a way to make it look better. I will say that by and large, Mastercard's adjusted expenses aren't as egregious as some of the other companies that we look at here. So let me do this, Travis. I'm going to jump back over to their presentation, and I'm going to walk through some numbers again for the quarter, just to kind of break down what's going on. Because the best way to describe it is, again, you go from 18% revenue growth for the year to 12%. Now this is adjusted, but their non-GAAP revenue is the same as their GAAP revenue. That's not adjusted at all. So that's good to know. So again, revenue growth is slowing in the quarter. Adjusted operating expenses, again, the adjustments they make are relatively minor, and it's the same adjustments they made this quarter to the year ago quarter. So they're apples to apples. Again, you see it growing in the quarter. Operating expenses grew at not that far from the same rate as revenue. It looks a little better on a currency neutral basis, and that's important because that's going to ebb and flow over time. The reality is a few years from now, the US dollar could be weak against the euro, for example, which is a really important currency for Mastercard. And all of a sudden that operating leverage really pays off. The key is that it's just not quite what we've seen in the past. I want to break down the growth rates. So a couple things. So you see these percentage for gross dollar volume. The percentage, again, these are in currency neutral, local currency rates, right? So we see consistent revenue growth around the world. And it looks at the surface like, well, that's not that different than what we're seeing from inflation. But when you start looking at like transaction volume, it's like, okay, you know what? The growth story still looks pretty solid. So switch transactions, Mastercard and Visa, basically, they kind of serve the same purposes. Like they're the rails that connect. So think about like shipping, Travis. So you've got container ships that bring these big containers in, and then the containers get put on a train, and they run the train, and then they take that container and that intermodal container, and they put it on a truck, right? And then the truck takes it to the distribution center. Mastercard's like those rails that connect those other systems, right? And the other systems in this case are merchants and banks, right? Merchants and financial institutions. So switch transactions is the rails, right? So again, number of cards increased 5%, transactions increased 8%. That's great. When that means that not only there are more cards being issued, but there's more transactions are growing at a faster rate than card growth. That's a real positive for the business. Now, another thing that's really important, again, we keep talking about it. You talked about how this is a very international business. Cross-border volume continues to grow at a really high rate. Again, I think that's just a tailwind here because it's nothing I don't think that MasterCard's specifically doing besides focusing on having the tools to facilitate those sort of transactions. But it's just a reminder the world's opening up, and then we're returning to more normal travel patterns, which is going to drive cross-border volume. They're still showing this comp to 2019. Travis, this was really useful early last year and through all of 2021.
Yeah.
Because 2020, the world shut down. So it's a healthy metric, but I think it's becoming less and less important. And I wanted to just briefly talk about those pre-pandemic comps are becoming a little bit less useful. Let's look forward, Travis, what they're saying for the full year. So they made some comments about it, but I think this is useful because we just see low teens, right? This is their forecasted growth for the full year. And again, this is getting back to that healthy numbers, right? We saw operating expenses growing, I think 10% versus 13% growth in revenue in the quarter. Just in it, they're saying, well, we're going to get low teens growth and mid-single digits growth in operating expenses, right? So that's that operating leverage that we want to see. Now, and this is the full year. First quarter, high end of high single digits. So like 8-9%, mid-single digit operating expense growth. So we're getting the operating leverage, but the revenue growth is going to be, they're expecting it's going to be even slower than it was in the fourth quarter before ramping up later in the year. And that feels pretty optimistic to me, but they're backloading. They're kind of backloading it. And go ahead.
No, there's a couple of trends going on here, isn't there? So there's the opening up, there's people spending more money, the continued digitization, which effectively means just using credit cards as the rails instead of cash or checks.
Right. Inflation that while consumers are still spending, right?
Yeah. And then they also had price increases that went into effect last year, didn't they?
Yeah.
So right. It's kind of all these things hitting at once. You think about Mastercard being a pretty mature business, so growing at this rate is pretty impressive. But there's a lot of pieces going into it.
There are, and it is a very mature business. And here, yes and no, because as mature as it is, it's a mature business in a still growing industry. I think that's the key thing about it is that on a global, in the Westerners, particularly U.S. based consumers, are very biased to whether it's the card or whether it's the phone as the card. We use them to pay for everything, right? We pay for everything with plastic. And that's certainly not the case a large part of the world, but it's becoming increasingly so, particularly because of things like smartphones, where a larger cohort of new middle-class consumers they're going straight to digital transactions, using a device to make that payments and not using paper money. But the big thing, Travis, is business to business is still an enormous opportunity. Think about like government payments and again, just the business to business transactions is still largely paper checks. It's stunning how much of that is still hasn't transitioned. And that's where MasterCard has really made inroads more quickly than Visa. And I think it can continue being a place where it can drive a lot of growth. So as much as it's a mature business itself, I think the industry is still set for high single digit revenue growth, for the next decade, frankly, with that operating leverage that they can generate, that can really continue to make it a real compounder. But you see some risks with these kind of businesses.
Well, I think everybody in the financial space is trying to think about, is there a way to disrupt these rails?
Yeah.
Because I think even a company like Apple just kind of said, hey, we'd love to not pay Visa, or they're a MasterCard, right? We'd love to not pay MasterCard 2% of every transaction, but what else are we going to do?
Right.
And so this is one of the reasons that I've been really interested in cryptocurrency. And I know that turns a lot of people off, but from a
it's the joke, right? You say it about everything. Bitcoin fixes this, but
and Bitcoin specifically wouldn't fix this because that doesn't have low transaction costs. But
no,
there is a reason that big bank CEOs are very interested in the blockchain.
Right.
Because they see a way to disintermediate a company like MasterCard or Visa and say, you know what, we still want to keep our fees because they're part of this transaction as well.
Mm-hmm.
But we want to make it lower cost for everybody and have less friction in the system, maybe even increase the number of transactions as a result. So that means we generate more revenue. I think that's coming. I don't know when. It's not going to be this year. It's probably not going to be next year. But what I think is really interesting is I think and study a lot about disruption is what ends up happening is the disruptions that are really impactful are the ones that the incumbent doesn't have a response to.
Right.
If a cryptocurrency comes along and the transaction cost is a fraction of a penny and that money can get from you to the merchant, let's say you're buying a cup of coffee, and it's not going on Mastercard's rails anymore, and the bank, it's going on blockchain rails. How do they compete with that? They can't lower their price to compete with a just strictly digital transaction that has no intermediating company involved. So that's where that's what I'm watching closely. We have definitely not seen that in the numbers yet. Watch companies like Square and PayPal first. One of the things you talked about that I think is really interesting is the customer's already trained. The customer can use the digital wallet on their phone. They're paying on a digital payment, tablet, even if you're using like tap to pay. The physical card isn't valuable anymore. It's just, if we were going to build this entire system now, the physical card wouldn't exist. So I think that's a really interesting dynamic, that the change to go from where we are today to using different rails is so much smaller than going from checks to credit cards.
The challenge right now, Travis, is when it comes to on blockchain, is the intermediary becomes, well, you have to buy Bubba token, right?
Well,
you pay in Bubba. Well, but the way that, like the mechanics, by and large, there's an intermediate. The intermediary becomes the crypto asset, and until that becomes seamless and like the value of the crypto assets are predictable and stable, or pegged to whatever currency.
Yes,
you're buying.
I think it would be a pegged currency. I think all of that would happen in the back end. If you're talking about like a payment processor like Square, I think that your usage as a user or even as a merchant would change absolutely none. You would do the exact same things that you're doing today.
Right. When that happens, then that's where the disruption happens. And whether it's Netflix and Reed Hastings saying, okay, we got to disrupt our DVD business and move to streaming, and somebody in MasterCard figuring that out, right, in a way that doesn't kill their cash cow, that's what remains to be seen. You know, and
MasterCard's moving into this space too.
Yeah,
they see it. They see it. They know it's coming. Yeah. Well, that's an interesting one. We'll definitely keep an eye on that, because I'm curious about that. I sold all my credit card stocks last year, and I wrote about it if you want to go back and look at that one. But I see disruption coming. I just don't know. Disruption's impossible to predict the timing. Thanks for watching. Jason and I will be back here on YouTube and on Twitter, so follow him at The Smattering Show on YouTube. Subscribe here to Riiv Investing. Thanks for watching. We'll see everybody next time.